They say the best things in life are free. Rubbish! Have you ever tried to enjoy a good time without spending a penny? It's nearly impossible. Have you seen the price of a decent bottle of wine lately? It's enough to make you want to stick to tap water, and don't even get me started on the cost of living in general, but we do get some freebies in life, like death and taxes. No escaping those darlings. They are the ultimate party crashers, always showing up uninvited and at the most inconvenient times. But while we can't outrun the Grim Reaper or HMRC, we can certainly outsmart them, at least when it comes to inheritance tax. Yes, there are ways to minimize the impact of these inevitable guests. This guide will arm you with the knowledge to navigate the UK's inheritance tax maze. It's a complex system, but with the right information you can find your way through it. We'll make it fun, promise. Learning about taxes doesn't have to be a dreary task. Think of it as a game where the stakes are high, but the rewards are even higher. Think of it as a treasure hunt with your legacy as the prize. Imagine leaving behind a treasure trove for your loved ones instead of a hefty tax bill. Ready to outwit the taxman and keep more of your hard-earned cash in the family? Let's get cracking. Together, we'll explore strategies, tips, and tricks to ensure that your wealth stays where it belongs, with your family. So grab a cup of tea, settle in, and let's embark on this journey to secure your financial legacy. Inheritance tax, or IAHT as the cool kids call it, is like that nosy relative who shows up uninvited at your inheritance party. They want their cut of the pie, cheeky beggars. In a nutshell, IHT is a tax on the estate. That's fancy talk for your stuff you leave behind when you pop your clogs. Think property, savings, investments, that vintage feather boa collection. It's all fair game. Now, the good news is not everyone gets hit with this tax. There's a threshold, a magic number below which the taxman doesn't even bat an eyelid, which brings us to... Hold on to your hats, folks, because here's the magic number, £325,000. That's the current nil-rate band for inheritance tax. If your estate is worth less than this when you shuffle off this mortal coil, congrats! Your loved ones won't pay a penny in IHT. But what if you're rolling in it, you lucky thing? Well, anything above that £325,000 threshold could be taxed at a whopping 40%. Ouch! That's enough to make even a hardened tax inspector wince. But don't fret just yet. There are ways to shrink your estate and keep more of your dosh in the family. Stay tuned. Remember those magic words, nil-rate band? Well, get ready for a bonus round. If you're leaving your family home to a direct descendant, children, grandchildren, etc., you get another tax break, the residence nil-rate band. This little beauty adds an extra chunk of tax-free allowance on top of your £325,000. In 2023/2024, it's worth up to £175,000. That means a couple could potentially pass on a cool £1 million without paying any IHT. Not too shabby, eh? But hold your horses. There are rules and regulations. Naturally, it wouldn't be the UK tax system without them, would it? Section 5, Giving While Living, the joy of gifting and saving tax. Remember that saying, it's better to give than to receive? Well, it turns out that this age-old wisdom holds true in more ways than one. When it comes to inheritance tax, giving can be a strategic move. By gifting during your lifetime, you can potentially reduce the tax burden on your estate. Imagine the joy of seeing your loved ones enjoy your gifts while you're still around, rather than waiting until you receive that final curtain call. You see, gifts you make during your lifetime might not be subject to inheritance tax. This means you can share your wealth and happiness without the looming worry of hefty taxes. That's right, you can spread the love and reduce your tax bill at the same time. It's a win-win situation for everyone involved. There are limits, of course. The government has set specific rules and thresholds to ensure that gifting is done responsibly. You can't just give away everything you own and then show up at your kid's doorstep asking for a handout. That would be quite the surprise, wouldn't it? But you can make regular gifts out of your income, or give away lump sums up to a certain amount. These gifts can be a wonderful way to support your family and friends while also managing your estate efficiently. Think about the special occasions in your life: birthdays, weddings, anniversaries. These moments are perfect opportunities to give meaningful gifts that can make a real difference. Consulting with a financial advisor can help you navigate the complexities of gifting and inheritance tax. They can provide tailored advice to ensure that your generosity benefits both you and your loved ones. So embrace the joy of gifting, share your wealth, create lasting memories, and enjoy the added bonus of potential tax savings. After all, giving is not just about the present, but also about securing a brighter future for those you care about. Happy gifting. Section 6, the 7-year itch, outsmarting the taxman with time. Here's a fun fact for you. Inheritance tax has a 7-year time limit. Think of it as the taxman's version of 7-year itch, but instead of Marilyn Monroe, you've got stacks of cash. If you live for 7 years after making a gift, it's completely tax-free. The clock stops ticking, the taxman goes away empty-handed, and your loved ones get to enjoy your generosity without any nasty surprises. Of course, predicting the future is trickier than predicting the winner of Eurovision. But the 7-year rule is a powerful tool in your tax planning arsenal. Section 7. Trust fund babies, not just for the rich and famous. Trusts, they sound complicated, don't they? Like something out of a Dickens novel involving dusty old lawyers and even dustier old money. But trust me, pun intended, trusts aren't just for the mega-rich. Setting up a trust is like hiring a financial bodyguard for your assets. You're essentially putting your money in a special box with instructions on how and when your beneficiaries can access it. This can be a great way to protect your wealth for future generations, control how it's spent, and potentially reduce your inheritance tax liability. Section 8. Charitable giving, leaving a legacy beyond your years. Want to leave a lasting impact on the world? Charitable giving is a wonderful way to support causes close to your heart, and it comes with some handy inheritance tax benefits too. Gifts to charities and political parties are generally exempt from inheritance tax. Plus, if you leave more than 10% of your estate to charity, you might even lower the inheritance tax rate on the rest of your estate. So, not only will you be making a difference, you'll also be giving the taxman a run for his money. Section 9. Don't forget the business reliefs tax breaks for entrepreneurs. Are you a budding entrepreneur, a business mogul in the making? Well, the taxman has a soft spot for you too, believe it or not. There are generous reliefs available for business assets. This means you might be able to reduce or even eliminate inheritance tax on your business, whether it's a family-run shop or a tech startup about to take Silicon Valley by storm. The rules around business relief can be complex, so it's best to get professional advice to make sure you qualify. Section 10, professional advice, your secret weapon against tax woes. Feeling overwhelmed by all this tax talk? Don't worry, you don't have to be a financial whiz to navigate the inheritance tax maze. That's what financial advisors are for. Think of them as your personal tax-slaying knights in shining armor. They can help you create a bespoke plan to protect your wealth, minimize your tax liability, and ensure your loved ones are taken care of. Remember, inheritance tax planning is not a DIY project. Get expert help and enjoy peace of mind knowing your financial affairs are in order. Section 11. The last laugh, enjoy your wealth and plan for the future. It's not just about the numbers in your bank account, but about the moments you create and the memories you cherish. So there you have it, darlings. The journey of managing your wealth and planning for the future is a blend of wisdom, foresight, and a touch of joy. Inheritance tax doesn't have to be a scary monster hiding under the bed. It's simply another aspect of life that, with the right approach, can be managed effectively. With a bit of planning and a dash of good humor, you can outsmart the taxman and keep more of your hard-earned cash where it belongs, with the people you love. Think of it as a game where strategy and laughter go hand in hand. Remember, life is for living, not just for tax planning. It's about enjoying the little things, the big celebrations, and everything in between. So enjoy your wealth, spend wisely, and rest assured that you've done everything you can to secure your legacy. Your efforts today will ensure that your loved ones can continue to create beautiful memories tomorrow. And always remember, if you're ever in doubt, a good laugh and a cup of tea can solve almost anything. It's the British way after all, so here's to a future filled with joy, laughter, and well-planned wealth. Take the time to appreciate the present, plan for the future, and most importantly, enjoy the journey. Cheers to a life well lived and a legacy well planned. Disclaimer: this video is for general information purposes only and should not be construed as tax advice. Please consult with a professional advisor for specific guidance related to your personal situation. If you have enjoyed this video, please subscribe to our channel for future similar videos.